oil sector, both upstream as well as downstream companies, Sharon, and for obvious reasons. You've had crude oil prices that have been elevated, significantly elevated. They dipped to a recent low of $98 to the barrel, but they've ratcheted up once again. And in fact, Brent crude is again on the boil. But what does it mean for the oil marketing companies here in India? Let's talk about this on today's edition of BNSN Lens. Now, yesterday as well as today, you've had these oil marketing companies increase the prices individually by 80 paise each. So yesterday it was increased and today it's been increased. But that seems to be just a bit of a drop in an ocean. Gaurang Shah is joining us right now. Kunal Bothra will join us in just a short while. Gaurang, good morning to you. It's an interesting time, shall we say, for these oil marketing companies. Finally, they're getting a little bit of respite. Is that enough, or do you see an impact on the earnings?
Thank you, Alex, and morning to all of you. Also, impact would definitely be felt because, like you rightly mentioned, this is just a drop in the ocean. And for the last 137 odd days, petrol and diesel prices were frozen. And over the last maybe about less than a month, we've seen a substantial boil in the crude oil prices. So depending upon how much of inventory does the respective oil marketing companies hold, the impact would be felt. But more so, I think, Alex, not only OMCs, high crude oil prices will have its impact across sectors which are closely interlinked to it. And it will also depend as to how much of price hike we are able to put in place. Structurally, fundamentally, over a longer period of time, we remain positive on BPCL and HPCL. On IOC, we have a reduced recommendation. And, international crude oil prices, higher crude oil prices would also mean how much of, energy requirement India can secure from the global markets. As we recently heard, India could manage to secure Russian oil supply at a discounted price, and that too on a ruble-rupee equation. And along with that, Alex, I think the one thing that we should also keep in mind is the sooner rather than later resolution as far as Iran nuclear issues are concerned would also mean that there could be a substantial supply once the issues are sorted out with Iran, and Iran can supply its crude oil and natural gas into the international market. And as we all know, Iran is the second and the fourth largest producer of crude oil and natural gas. So these are some challenging times, but along with challenging times, I think it is very prudent to keep our eyes on what the government does for its energy requirement, securing its energy requirement in the international market at discounted prices, and not in dollar terms, but the respective country currency in INR terms.
All right, so that's a pretty comprehensive view, Gaurang. Thanks so much for that. Kunal Bothra is with us in studio. Kunal, good to see you here. But let's talk about the OMCs. Interesting space. ONGC is the other side of the spectrum, of course, and people say you can buy this as a counter to rising crude oil prices. How would you view the OMCs on the charts?
See, as of now, there is no major breakout which has happened for OMC. So it's become very difficult for us to categorize that which side the direction of the move could be for these OMCs. Now, if you look at the charts for the two specific names, IOC as well as HPCL, they have been absolutely sideways. Now, the ranges have contracted for these stocks in the last 6-8 months. That's also one of the reasons why I don't believe that there is going to be a major structural breakout. So as you can see, this is the charts for IOC. Look at the range the stock was in the second half of 2021, and the ranges have gotten narrowed. Now it becomes very difficult to anticipate which side the stocks would break out. So we wait out for confirmation. So for example, if IOC breaks past about 125, then we can category call it as a strong breakout candidate. But the stock has not been obliging towards a breakout of late. You look at the charts for the other OMC stocks, even that stock has gone into a downward trend for itself the last 6-8 months. I think stocks like HPCL, BPCL, they've gone into a correction zone. So, which is why it becomes very difficult. And I would sense that these stocks are getting into a structural consolidation / downtrend for themselves. So, I would not suggest a buy into these names looking at the structural chart patterns as of now.
All right, so that's the take coming in from Kunal as well on the OMCs. But let's bring on board my colleague Somit, who is actually tracking what's happening with the crude oil prices. Remember that the crude oil, not the crude oil prices, I mean the fuel prices, they've been hiked by about 1.6 rupees in the last 2 days itself. So Kunal, have you made sure that you filled your fuel tank already or no?
Well, absolutely yes. I think it was a couple of days back, and I'm lucky that I've caught the top, or caught the bottom.
What about you, Alex?
I went last week. Unfortunately, I timed it wrong, and so I'm at half tank right now.
Oh no.
You know, we were discussing that,
Exactly.
you know, traffic is back to normal in Mumbai. So
It was your birthday, I still
it
remember.
was my birthday. Unfortunately, I spent an hour and a half in traffic on the way to work. But Somit Sarkar is here. Somit, we're discussing how quickly oil or petrol prices will go up, but they have been raised a couple of times already. What is the implication of this increase for the oil marketing companies?
Well, if you see in the last couple of days, the petrol and diesel prices have been hiked by nearly 1.6 rupees per litre. Now, this was on expected lines. However, it has been delayed a bit. Market expectation was that after the election period gets over, retail fuel prices will start increasing, but that didn't happen. And from the last 2 days, we have seen an 80 paise hike each day. But what analysts are expecting is that given the current crude prices, the petrol and diesel prices could be hiked by 12 to 15 rupees. So we'll have to wait and watch how that pans out. Now, what happens for the oil marketing companies is that they so far they have been earning a negative gross marketing margin, because if you see, petrol and crude prices have remained the same from 4th November till now, while crude prices have increased by nearly 50% in that same time period. So the gross marketing margin that they were earning by selling every litre of petrol and diesel, that was negative at around 12.5 and 10 rupees. So with this increase of around 1.6 rupees, some of this losses will be recouped, but they at least need a hike of around 12 to 15 rupees to get back in the green and start earning some profits by selling petrol and diesel.
All right, thank you so much for that. Somit, and no doubt in coming days we will have to brace for higher fuel prices, given that the way how the crude prices have moved. We all know that the OMCs are seeing an under recovery of about 15 rupees per litre.